In this video, a truly shocking and rare event. An investor who seems to understand Tesla appears in the mainstream finance media and says things about Tesla and Tesla's so-called competition that actually make sense. If I didn't know any better, I think this guy not only had a brain, but also wasn't susceptible to being overcome by his emotions. And just quickly, for those of you who saw yesterday's Super Bowl EV reaction video, it has come to my attention that I may have made a slight error in assuming that the fake Ram truck that doesn't exist yet with fake specs bragging about range yet not actually disclosing the range may in fact not be a fully electric vehicle. Based on some of the wording in the fine print regarding a range extender, it's possible this may be a hybrid, given the severe lack of actual details and specifications on the product. I don't know for sure, but I just wanted to quickly recap. Jeep ran an ad claiming that electricity or electric equals freedom, while advertising a fucking internal combustion engine vehicle with a little battery in it, also known as a hybrid. So we saw an EV ad for an ICE vehicle with a little battery in it. I also reacted to the Ram truck, which apparently may also be a hybrid. Again, they didn't give enough information, so I don't actually know. Thanks, Ram. And then I also reacted to the third ad, which didn't actually feature any real vehicles unless you include GM's Hummer EV, which is a joke. I'm still yet to determine if a single non-celebrity owner has taken delivery of one of these things. It almost appears as if GM strategically decided to make an electric Hummer, knowing full well no one would buy the thing, and have started custom building them, not with a mass production line, but hand assembling them to deliver to people, celebrities mostly, to endorse them. Of course, this is pure speculation, but the point I'm getting at is GM's ad, save for the Hummer EV, I think deliveries last year were about 12. I'm just kidding, by the way. It was actually a staggering, ready for it? 854. Oh no, just 854. You did it, Mary. Aside from that, GM's entire advertisement featured a bunch of fake electric vehicles explaining why they were paying Netflix to put their fake vehicles in Netflix series instead of actually making vehicles and putting them on roads. They'd rather pay Netflix to put computer renderings and or prototypes in their series. So my sincere apologies, dear viewers, for accidentally misleading you into thinking I was reacting to electric vehicle commercials when in fact I was reacting to hybrid electric vehicle commercials and or computer rendering commercials. We all make mistakes. And speaking of mistakes, possibly the biggest you'll make in your entire life is missing out on today's exclusive Patreon video. The AI revolution is here. If you're not aware, you may be out of a job, out of a career, or able to take advantage of language-based AI assistance to massively improve your productivity and output, you are literally making one of the biggest mistakes you could possibly make. Do not sleep on what's happening. That is the subject of today's Patreon exclusive video. If you're not a member, you can join with the card in the corner or the link in the pinned comment. So Tesla stock today, down one Spiegel. What's a Spiegel, you ask? Oh, that's one Mark Spiegel, net worth $2.25. Closing the day, just under $195 per share. Tesla stock now collapsing over the last 5 trading days by almost 1%. Meanwhile, year to date, Tesla stock still up over 80. And yes, I still believe firmly that this doesn't make sense. I still think Tesla stock is far and away the best risk-adjusted opportunity that I am personally aware of in the stock market, and it is not even close. But what would I know? I'm just some idiot on the internet.
Future fund managing partner Gary Black is with us. Gary, good to have you. The last time we spoke, you were bemoaning the fact that Twitter was taking an awful lot of Mr. Musk's time. You were encouraging him to move on from that to a certain extent, if I recall. He hasn't yet. I've reported he's looking for a new CEO, hasn't found one, still spending a lot of time on Twitter, and yet we've had this amazing rally in shares of Tesla. To what do you attribute it, and why do you believe it will continue?
Tesla is still very cheap. You can't find other mega cap growth stocks with 30 to 35% volume growth trading at my number 40 times earnings. And that's going to continue. You see EV adoption going through the roof. Look at California, where it's now 17%. China, it's 22%. And Tesla is the best way to play that surging EV adoption. And again, I think when you look over the next couple months, you have Investor Day coming. You have a blockbuster first quarter coming. You got Cybertruck coming. You got, some sort of FSD single stack product, which will improve that. You got mega packs coming. There's so many catalysts. This reminds me very much of the end of 2019 as we were looking into 2020 with all the catalysts coming.
The dude's right. Catalyst after catalyst after catalyst. And this is before Tesla's Investor Day in a few weeks' time. Of course, what Tesla announces at their Investor Day and whether or not the stock market understands what is announced at Tesla Investor Day is an entirely separate matter. But Gary is absolutely spot on. Tesla has a huge handful of extremely important catalysts for the company to drive sales, revenue, and future profitability, all just around the corner. And to Gary's point about Tesla versus other mega cap stocks, the rate Tesla is growing their revenues, earnings, there's nothing else in the marketplace even close. And this is an opinion, this is fact. With Tesla stock around the $200 mark, market cap a little over $500 billion, I still believe it is the best risk-adjusted opportunity in the stock market, at least that I'm aware of.
And so I guess, would you argue in recent weeks then, the positive fundamentals, whether it's the reopening of China, the price cuts, on and on, have simply outweighed what continues to be, I would assume, a concern that Mr. Musk is spending a lot of time focused on Twitter?
Look, that's short term. He will give up Twitter. And as I tell people, clearly there's an overhang last year from him spending as much time as he did on Twitter and all the noise. There's no question about that. But that's temporary, and he will give that up. He will find a CEO who can, basically drive the ad spending, can drive the product, can monetize the DMAUs. And that's just a matter of time. I think you got to ignore that because that's just noise.
Totally agree. It is just noise. It is short term, and it should be ignored. That being said, I think it's going to take quite a while before Elon Musk can find a suitable CEO to run Twitter. Until then, he'll be very hands-on. And there's no doubt Elon will not put somebody in the role of CEO of Twitter unless he truly believes they're capable of doing the job. Finding somebody who's insane enough to want the job and who's competent and capable, going to be quite the challenge. I personally wouldn't be betting on Elon Musk finding a new Twitter CEO anytime soon. But that said, as soon as he can find somebody suitable, Musk won't f*** around in naming them Twitter CEO. The problem is finding somebody who's competent, suitable, willing, and able. Not going to be easy.
The reason you own Tesla is because the street is missing two big things. They're missing Cybertruck and they're missing the Megapacks. And
autonomy, although in fairness, I understand the skepticism around autonomy. There's a little bit of uncertainty around timing, exactly when is autonomy solved. But at this point in time, Wall Street is completely ignoring the potential implications of Tesla solving autonomy and awakening a fleet of robo-taxis. Last I recall, Gary himself isn't even modeling any earnings for Tesla's robotaxi fleet, which is the biggest opportunity in Tesla's future beside the bot.
Those two things are probably worth $1.50 to incremental earnings by 2024. That's about 25% of where the street is today. That's why you want to own Tesla, not because he will give up Twitter. He will give up Twitter. There's no question in my mind that that's coming.
Mm-hmm. Gary, meantime, pricing's been all over the place, right? We had the price cuts, which looked like it was going to lead the industry into a price war. Now with the credit and the apparent strength in used cars in January, pricing's being rethought the other way. I just wonder whether or not you thought they were too quick to jump the gun.
They have been taking pricing. In fact, they took another $500 increase over the weekend on they call it the all-wheel drive standard range Model Y, and on the performance version, and there's no inventory. If you look at the inventory of Model Ys, you go on their website, there's nothing to sell. And so it makes sense that they're taking the pricing back up. But I think when you get to the end of the first quarter, we're going to see a number for volume that's in the 450 to 475 range. That's way above where the street is. The street's about 425.
What an incredibly bold prediction from Gary Black, suggesting that Wall Street may be underestimating Tesla, which is definitely the first time in the company's history in which this has happened. But again, fair point. This is the story of Wall Street not understanding Tesla. It's a decade-long story and counting. And just regarding pricing, again, this will be a recurring theme. Tesla will be very frequently adjusting pricing dynamically globally based on order flow. Prices will go up, prices will go down. The trend will be down, but that doesn't mean over the short term Tesla may not raise prices, sometimes significantly. It's just a function of supply and demand. At this point in time, as Gary points out, Tesla has no vehicles in US inventory, none. This tells us the price of their vehicles in the US today are actually a little bit too cheap. So don't be surprised to see very frequent price changes from Tesla in the future, even though long term they're trying to drive their costs down and pass those savings on to consumers. Until they've ramped to many millions of units of annual capacity, there'll be periods of time where Tesla is forced to jack up the prices on their vehicles to ensure consumers don't have to order them and then wait an absurd amount of time to take delivery.
Look, they could just keep pricing where it is, but there's no inventory, so you might as well at least get some pricing up because they took it down so much. And the other thing I would just point out is at the end of 2022, there were a lot of people saying there's not enough demand.
This is true. People were saying that at the end of 2022. I think I was a little bit more obnoxious in my description of these people being wrong, but the underlying message was they are wrong, they will be proven to be wrong, and I will be here to clip the videos of me saying they will be wrong when they're wrong. I do just once again want to take this opportunity to roast the absolute fuck out of all the morons who actually believe there were demand concerns and as a result of that, sold Tesla stock near 2-year lows with a valuation that made no sense. Everyone makes mistakes, but assuming you've done sufficient thinking, this is an inexcusable mistake. Many people didn't do sufficient thinking, that's on them. Once again, Tesla will sell every vehicle they make between now and the ramp to 20 plus million vehicles per year. The caveat, obviously, I'm afraid I have to point this out because sometimes even obvious things aren't super obvious to potatoes. This will require them, over time, to massively reduce the average selling prices of their vehicles so more consumers can afford them. But there will come no point this decade where Tesla slows down their vehicle production, slows down their expansion plans, goes, oh, you know what, that 20 million, let's try for 10 million instead. Not going to happen. Instead, they're going to be moving as fast as they possibly can, increasing their production as fast as they possibly can, driving their costs down, passing those cost savings on to consumers, and selling every vehicle they make. And I know, throughout the rest of this decade, there will be many times where investors and experts and analysts question whether or not there's actually sufficient demand for EVs. And every time this happens, I'll get secondhand embarrassment by hearing these idiotic comments. EVs are happening. ICE sales are currently collapsing. This disruption is a done deal. We're now waiting to see it play out. Of course, I don't have a time machine, so I don't know what has already happened. I'm just telling you what is going to happen. Something most Wall Street analysts, most in the finance media, most retail investors, and absolutely most legacy automotive companies just don't believe. Funnily enough, this isn't the only opinion I've had that went completely against the consensus in the last few years. Not just as it relates to investing, and I'm still batting 1,000. In totally unrelated matters, don't forget, it's for your protection, not our quarterly profits.
It was not that there was no demand at the end of 2022. You just had a lot of people waiting for resolution on this IRA $7,500 EV credit.
Bingo. Isn't it amazing when somebody has a brain, uses it, and as a result says things that are accurate and reasonable about reality? I said this a million times. I'm seeing videos left, right, and center from adults. Oh, Tesla doesn't demand. I mean, I tried to point this out at the time. The fact that consumers were delaying a purchase doesn't mean there's no demand. It means that they're delaying a purchase. The demand's still there. As I mentioned at the time, if a consumer knows a new incentive is phasing in or out, they could potentially save 10, 20% of the purchase price on a vehicle by waiting a few weeks. Unless they have tens of thousands of dollars to vaporize and they're in a major rush, they would have to be a moron not to delay the purchase of a vehicle. This is exactly what happened. Those suffering from small brain syndrome immediately assumed, well, obviously proves there's no demand. I'm selling my Tesla stock. And I just couldn't believe what I was witnessing at the time. I really appreciate Gary Black. He's one of the few folks who actually gets it and is in the mainstream finance media regularly sharing his thoughts and opinions. The majority of the folks discussing Tesla since their IPO in the mainstream finance media in general have been completely clueless. And I mean completely clueless. I love the fact that Gary actually gets it.
We've now got. So now all the Model Y trims qualify for the EV credit. All the Model 3 trims qualify for the model, for the EV credit. And that's what's driving volumes in the first quarter. So they could take a little bit of pricing on Model Y.
Gary, just to shift gears a little bit here, since I see that Google is one of your top holdings in Future Fund as well. Artificial intelligence, the fact that we have this race, if you will, between Microsoft and Alphabet, as well as some of the Chinese tech companies announcing their own chatbots, but also just the fact that you've seen this headiness in the market around any stock that has AI attached to it in terms of trading right now. I just want to get your thoughts on the capabilities and the future monetization possibilities around AI and who the leaders will be.
ChatGPT is cool. It's fun to use. It's useful. I think it's going to change the way we do search. But don't bet against Google. Google's been hiring and working on AI since 2017. And when I look at Google, the reason we own it, it's trading at 15 times next year's earnings. It's growing revenues 11, 12%. It's growing earnings at 15%. They will figure out a way to add AI into their search capabilities. And it's just interesting. Everybody is throwing around AI as a buzzword. If you listen to conference calls, we do, the CEOs used AI 6 times as much in the last conference call as they did in the third quarter conference call. So it's becoming the magic buzzword. Some people are going to get it, and some people are going to have products that, to your point, can be monetized. But others, they're just throwing around the word, hoping that investors see it and reward them for it. I think Google is somebody that has always been able to use AI in their products. They will incorporate AI into search, and I think they will do just as well as Microsoft.
Finally, we'll end on Tesla. I mean, EV is now a priority for virtually every major auto manufacturer in the world. Toyota, add that to the list. They're sort of changing their allocations to increase EV as well. You're not concerned, as so many others seem to be, that ultimately, market share for Tesla starts to decline in a market way?
We've been hearing about EV competition forever, and yet what I look at is global EV shares. So what is Tesla's share of EVs? It's been pretty steady. It's come down in Europe. It's gone basically nowhere in the US. It's about 65%. China, it's actually gone up. And so, and you saw this last night with the Super Bowl ads, right? Tesla didn't advertise, but you had GM and Dodge Ram and Jeep all advertised. And what happened to Google search activity for Tesla? It went up. It jumped up because when people see an ad for a competing product, whether it be a Jeep EV or a Ram EV, you know what they do? They search for Tesla. And consumers are very educated and they're resourceful. And they will find out that when you look at performance, you look at range, you look at the technology, you look at the safety ratings, you look at the number of charging stations, they're going to walk out and buy a Tesla, even though they may have seen an ad for a Ram last night. So look, we've heard about competition forever. Tesla still has the best product on the market, the most charging stations. I don't think Elon Musk is losing sleep over all the competitors come in. In fact, he's probably glad because he's growing the whole EV market. And that's again why you own Tesla, because EV adoption around the world is surging. It'll go from about 10% last year to 35% by 2026 to 60% by 2030. If you just do the math, you say, okay, if Tesla holds its share, that's like about 30% volume growth per year. That's huge.
Yeah. Problem for Elon Musk is not losing sleep, Gary. It's that he doesn't sleep. But that's a matter for another day. Always good to have you, Gary Black.
Once again, Gary Black gets it. However, regarding his EV adoption estimates, I think he said 60% new vehicles sold being EVs in 2030. I think that number is going to be significantly higher. Like I said, EVs are around price parity today. A couple of years' time, they'll be much cheaper than compelling ICE vehicles. It's game fucking over at that point. Now, I just want to take a moment to appreciate Gary Black, one of the few folks from the traditional finance world who actually gets Tesla and wasn't overcome by his emotions, suffering from fear, uncertainty, doubt, and delusion as Tesla stock plummeted toward 2-year lows. There were many geniuses in the last few months claiming Tesla stock was headed to zero or close enough, concerns about demand, fearful about a recession, opening their mouths and self-immolating time after time after time. Gary was not among them. I think the last 6 or so months regarding Tesla have really separated the adults from the children in the room. And yes, I've been keeping score. So to recap here, Tesla growing faster than any other mega cap company, and it's not even close. Valuation still absurdly low. A huge number of near and medium term catalysts for Tesla, including a ton just this year alone. Stock market not truly understanding Tesla's potential or the inevitability of the EV transition. Tesla continuing to demonstrate insane pricing power, ridiculous demand, an inability to produce enough vehicles to meet said demand, and Tesla's so-called competition yesterday driving more traffic to Tesla's website as they do comparison shopping. Let's see how this fake EV that doesn't actually exist compares to a Tesla vehicle that does actually exist. Oh, Teslas ain't bad, I might buy one. And this is the part of the video I'd normally encourage you guys and girls to try Athletic Greens AG1, get your 1 free year supply of vitamin D3 and K2, but I'm not going to. Why? Well, if I did that, you might feel and perform your best, and who would want that? So definitely don't click the link in the pinned comment or head to athleticgreens.com/SMR, because there's no reason on earth that you would want 75 vitamins, minerals, nutrients, and whole food source enzymes, probiotics, prebiotics, things to help with gut health, digestion, which can affect mood and energy. I mean, why would anyone want to feel and perform their best? Definitely not me. So please don't take advantage of the offer. It's not like there's a 90-day money-back guarantee, and it's not like there's a very high probability you'll start to feel and perform even better. Instead, I highly encourage you to just keep doing what you've been doing, keep feeling like you've been feeling, and keep performing like you've been performing. Oh, and speaking of performing like you've been performing, don't forget to check out today's Patreon exclusive video, because these may be the last few weeks you're actually able to perform at all in your job before you're disrupted entirely by AI. And I'm not even kidding. So, see you over on Patreon. Love ya.